Hey, good morning, everyone. This is Kirk here again at Option Alpha and TGIF, I guess, for this crazy week that we've had here in the markets. It's Friday morning before the market open. I wanted to get a video out just to members, of course, just kind of running through my thoughts on the market and the only three positions that we really have open. So I'm actually glad that we're continuing to stay mostly in cash and away from this market for the most part. I think that the overall risks of trying to swing trade this market and, throw in positions just for the sake of having positions on the portfolio is crazy. So I'm only going to make trades when I think there's a good risk reward. I think we're doing really good on the positions we have, and I'll go over them now. So if we look at the market, though, it's been a bloodbath these last 2 days, and today doesn't look so promising already with the futures down 1% already this morning. It's about 7:30 Eastern time, of course. So we could see some more downside pressure on the Dow. If you look at this chart, this is actually an analog that I've been using for the last, probably 5 or 6 months now. This analog of comparing the current market to the 2007 2008 top. And so I'll go to that side of the chart here in a second. But again, I'll just go through it. I've highlighted the key points, the key bounces with these ovals, obviously the key sell-offs and retracements, and then obviously the first top here in red multiple times in videos and posts. And right now, I think we're in this green box here, in this, and actually we're right at the end time-wise of this green box in relation to the 2007 2008 top. So from here, I think we could see a little bit more to the downside, a little bit more downside pressure, but I do think that we might actually rally through the end of October and into November. And so I'll tell you why, but I don't think that we fully exhausted the support here. I think that there could be still some support near. Now, whether on the Dow that's 10,500 or right in that area is yet to be told today. Obviously, we're going to be heading lower, so support's going to be a little bit lower than this today, but I think that overall we could see some support heading into the end of October and again in November. So I'll tell you why, right? So let's back up here on the chart. This is where we are right now on the Dow, and this is the 2007 2008 top. So you can see a lot of the similarities in support levels, retracements, bounces back on this line. And this is where we were in 2008. So again, you can see that we had that huge sell-off heading into the beginning of 2008. Very similar to what we just experienced in July and August. Had a retracement, and then again, another quick sell-off, and I'll just actually highlight this part. But again, another quick sell-off, and I kind of think we're right here, right where my cursor is. We're right there on the relationship between the 2007 2008 market. So this is what the market did back in 2008, and it just rallied for the next month and a half, and that really before it started to really sell off. I mean, it continued sustained 2 month sell-off here heading into the summer months. So I think this is the next leg of the market, and it would definitely be a good move for the bears. I think it would reset a lot of positions, get a lot of people long right before the next big short. So that's where I think the market could go, obviously, and you can see the relationship between these two on the chart here. So we could continue to head higher. Now, that doesn't mean we should ignore completely the risk to the downside, because it's very prevalent and anything can happen, right? If we look at our current positions, the only two positions we have on the naked portfolio are the SPY 90, which you can see has lots of distance between it. I mean, this is a really good position, great entry, lot of volatility when we enter this position. So our 90 strikes, even if the market falls another 10%, really, we're going to be completely fine. So I don't have any problems with this position. It's a great position. You can add more to it today if you want to. Same thing with anything in that same general region on all the other ETFs. The other one that we have is on OIH. OIH took a pretty good beating the other day, about 6.5%. But again, our strike at 95, I feel confident with. It's still another 10% below where the market is right now. So even if we get similar type drop to what we saw in August, we'd still be right above support on the OIH. So again, I feel good about that position. Obviously, oil had a huge volatility spike, so those premiums are spiking, but that doesn't negate the fact that it's a really good position. Now, if it continues lower, of course, then we'll obviously look to roll the position and step further from the market like we've done before. But right now, it's a really good position. And that's all we have. We have a lot of cash on hand right now, so things that I'm looking at are going to be gold, actually. Gold took a beating yesterday, and pre-market's taking another good 2.5% hit. So if we can see gold make a real sustained move down into the mid 50s, then I definitely look at going back and reselling some puts. I don't think selling puts right now is a good idea because it's just starting to make its way lower. Same thing with silver and USO, etc. You know, it's just breaking out lower. So we wanted to have a sustained move lower before we start selling puts on these. USO obviously is the other one I just mentioned. Again, just starting to break out lower, and you can see what happened when it just started to break out lower last time. It had a couple days where it continued to move much lower, already down 2.5% almost in pre-market. So I think that some of these positions are going to be really good. You just have to wait for their setups, right? The VIX is moving much higher and continues to stay up above 30, which has been really good for option traders. So we're just going to wait and let it continue to move higher. As soon as it gets upwards of 45, heading towards 50, I think that's a really good time to start selling premium, because even if it continued to move a little bit higher, the markets continue to move lower, you're going to catch it really at the optimal point. And it's not about catching the exact top in the VIX or the exact bottom in the market. It's about catching it at that peak of volatility, and that's where the premiums are the best. That's where you can get away from the market, like I was showing you on SPY, where we're almost 20% away from the market from where we entered it. So these are the types of trades you want. Still really great premium. You're not chasing, huge returns. Very consistent and very safe in this market. I think that everyone probably feels pretty safe with the portfolio that we have, and the fact that we don't have as many positions. And then the one final position I'll end this video for you guys this morning is the RUT, the RUT on the Russell. And again, our strikes on this credit spread are at 500. So lots of room below the market. It can sustain another 10% drop or more and still be a profitable position for October. So very confident in our positions. Very glad that we've continued to stay conservative. I think a lot of other newsletters are going to get slammed again this month like they did in August. So time will tell. But as always, hope you guys enjoy these videos, and happy trading.